Forensic financial analysis in high net worth divorces is the meticulous construction of a traceable record established before a single document is slammed onto a courtroom table. Federal evidentiary standards, specifically Rule 702 and Rule 26, mandate that expert opinions carry sufficient facts, reliable methods, and fully disclosed data. To meet these standards, the entire file is designed backward from the courtroom. The ultimate test of the work is whether it can survive grueling expert evidence scrutiny and opposing cross-examination. Subjective arguments must be discarded in favor of opinions that anchor directly to an unbreakable chain of raw verifiable data. The final output of this rigorous process is a pristine, isolated document, the finding card. This digital finding card requires 4 mandatory inputs: the issue tested, conclusion, dollar amount, and time period. It also lists the analytical method deployed and the alternative explanations rejected. The most critical parameter is the source chain, connecting the headline claim directly to the underlying evidence, tying conclusions to a specific bank statement page, ledger ID, or raw crypto transaction hash. Isolating each conclusion onto its own finding card prevents facts from being buried inside a narrative report. The claims are transparent and fully rebuttable. That clean finding card sits at the end of the process. At the start, the discovery reality of electronically stored information under Rule 34 is chaotic. A raw ESI is asymmetric. A single production might include hundreds of fragmented bank PDFs, mobile payment screenshots, and unstructured Schedule K-1s. Before analysis begins, raw data is converted into a normalized transaction table, requiring standard fields: source ID, owner, date, amount, and counterparty. We reconcile opening and closing balances, then deduplicate internal transfers to establish the marital estate's mathematical baseline. Skipping this step generates false positives. For example, a legitimate IRA rollover might suddenly look like a massive spike in hidden income. Normalization provides the structural steel of the case. By filtering out background noise, it prevents ordinary financial activity from being used as evidence of misconduct. A normalized transaction table is highly organized, but it is still internally subjective. It requires unshakable structural pillars to hold up in court. We use third-party anchors. These are monolithic documents generated and sworn to outside the control of the warring household. The primary anchors are federal tax returns, payroll Form 941s, Trust 1041s, and bankruptcy schedules. These documents rarely prove fraud or misconduct in isolation. Instead, they dictate the exact data points and asset classes that the forensic analyst cannot ignore. If a spouse checks yes on a Schedule B foreign account indicator, that single checkmark legally demands a corresponding trace of foreign assets. These sworn anchors lock the transaction model into place, tying the divorce file to an objective federal regulatory reality. The analytical phase only begins after the data is fully normalized and anchored. We perform targeted exception testing tied directly to the legal allegations, rather than conducting generic, aimless searches. To investigate business dissipation, we cross-match vendor and employee data to expose shared addresses and tax IDs. We apply similar logic for hidden nominee accounts, plotting transfer networks to identify isolated foreign wires or unexplained payments. Finding an anomaly triggers a mandatory defensive step. The analyst must test every identified outlier against legitimate alternative explanations. Several common accounting patterns can lead to false positives. For example, shared merchant terminals or debit card cashback often inflate GORMS inflows without representing new income. We also screen outflows to rule out legitimate non-taxable pension payouts or taxable fringe benefits. True anomaly detection relies on mathematical elimination. Innocent explanations must be disproven before an analyst can claim misconduct. In the most severe cases, the target spouse may have intentionally obscured or destroyed the primary financial records. But incomplete records do not prevent definitive financial conclusions. When primary books are unreliable, we deploy IRS indirect methods. We start with reported inflows on the left, weighing them directly against observed lifestyle outflows on the right. The mathematical gap perfectly quantifies the hidden income, finally balancing the scale. This method requires precision. The analyst must ensure non-taxable items, like inheritances or gifts, are not mistakenly counted as hidden income. Indirect proof functions as an analytical trap. It turns the deliberate destruction of records into a calculable liability in court. Every normalized data point, tested anomaly, and indirect proof converges into a final master document, the Source Reliance Appendix. It catalogs the critical variables: finding ID, question answered, quantified amount, method, and source chain. The counter-evidence column proves alternative explanations were rigorously tested and rejected. We also maintain a limitations log. This explicitly tracks missing records and documents ongoing ESI disputes. Documenting missing data up front, rather than hiding it, is critical for surviving cross-examination. A transparent, quantified limitation presented boldly is significantly stronger in court than a hidden assumption exposed under pressure. We move from the chaos of raw e-discovery to a rigid normalization table, through a targeted analytics engine, and into the final source reliance appendix. That workflow is dictated by one rule: the investigation must be designed backward from the courtroom. This architecture strips away emotional narrative and replaces it with traceable logic, allowing any judge, opposing counsel, or rival expert to trace a headline conclusion directly back to a raw ledger ID without a single guess. When the stakes are at their highest, a defensible forensic opinion moves past speculative rhetoric to become a record that withstands expert evidence scrutiny.